it's insurance, but the general public really doesn't, they know they need it, but they don't really understand what it is.
Hey guys, welcome to the show. So if you've bought real estate, if you own real estate, if you've thought about buying real estate, you have heard of title insurance, clouds on title, and preliminary reviews. So today I've got my friend, colleague, Lynne Lapinski with us. Lynne works for Fidelity National Title. She's been there for 24 years and she's a rock star. I call her for everything. I work with her on everything. And I'm just super excited to have her here. So Lynne, thank you for coming.
Thank you for having me.
There's so many conversations and so much stuff that comes up when it comes to buying a property or selling a property, and there's escrow and there's title. Mm-hmm. And no one knows what title really is. It's like this elusive thing.
Right.
And so, I'm hoping that today we can kind of walk through what title insurance is, what the process of obtaining title insurance, how having it or not having it can impact you as, a property owner.
Yeah.
And so, I think it's great. But so you've been in title for over 2 decades, right?
Yeah, I've been in title since I was 25.
Okay.
So we are, for a long, long time. So about 23 years. I'm about 23 years.
Yeah.
I started in title. I didn't know really what title was, to be honest with you. I was working for a builder at the time. Uh-huh. And I was working on like really cool custom homes. And we were doing, that's kind of when the whole like conversion of condos started happening. So we were doing a bunch of that stuff. Uh-huh. We had a ton of assets. And then I had a family member who actually worked at a competitor say, hey, I want you to come in. I'm moving companies. I think you'd be great in sales. And I had no idea what I was doing.
Really?
And the rest is history. So I've actually been in my territory my entire career.
Yeah. And you're from San Diego, born and raised, right?
I'm from San Diego, born and raised, and I'm from East County.
Amazing.
So I'm very familiar with everything out there.
Yeah.
So it's been a great career.
I love it.
But a lot of people, you're very right. A lot of people don't. It's very elusive. Like you don't really know what it's insurance, but the general public really doesn't. They know they need it, but they don't really understand what it is
or why they need it.
Yeah,
exactly right. So you are now with Fidelity National Title.
Yes.
You've been there since
2019.
Wow, amazing.
Yeah. So best company I've ever been at.
Yeah.
I really love the company. I love the people. I can't talk enough about it, but just great synergy. But it does matter who insures your property. I will say that. There's a lot of people that have title insurance companies here in Southern California and San Diego.
Yeah.
But they're not all built the same.
Got it.
Yeah.
Got it. So let's just dive into it.
Okay.
What is title insurance?
So title insurance is basically what you're doing is you're insuring. Okay. So think of it this way, right? So like when we buy a car, we're buying for the car that we're actually in, right?
Insurance for that car.
For that car. Mm-hmm. But when we do title, basically you're insuring a property like in arrears. Mm-hmm. Okay. If that makes any sense. The property. That's correct. So when I'm a seller, I go to sell a home, the insurance that we pay basically says, okay, buyer, you have clear title, meaning there's no boundary, issues. There's no deed issues. There's no judgments. There's no clouds on title. Mm-hmm. So then when the new owner takes ownership, there's nothing that's going to come up to kind of bite them, and put them in a bad situation.
So like an example could be Bob wants to sell his property, mm-hmm. but he has a contract with his neighbor, Jane, saying, I'm going to sell my property to you in 5 years.
Okay.
And if that contract has never been recorded or no one's aware of it,
it doesn't exist.
It doesn't exist.
That's right.
And so title is ensuring that if Jane is not the one who bought the property from John or from Bob, mm-hmm. that they're actually able to buy it. And you guys are saying, yes, you're able to buy this from Bob. This random contract doesn't exist and you're protected against that.
Yeah. Everything at the very end of the day, everything has to be recorded, right? So if something, let's say we have, in the back pocket or in a drawer from years ago, we have this easement deed or something saying, well, he was going to give me this or that. It doesn't matter because it's not, we go with what runs with the land.
Yeah.
So in our job is to be like, okay, well, they do own it. or the heirs own it. And so we need to go through a process of making sure that that is who says owns the property.
Yeah.
And they also don't have anything outstanding on the property that will hurt the future buyer. So it's almost like an investigation that we have to do.
Yeah.
And then after that investigation is done, then we can give them a policy.
A policy. Got it. And that's you're researching the chain of title.
That's correct.
Right. That's what it's called. So you guys go back 100 years sometimes, right? If not more.
It really depends, right? So if there's some situations where a home has changed hands multiple times, those are a little bit easier.
Yeah.
If you have a home that's been in a trust, or there has not been any, selling of the home for years, we might have to go like back to microfiche to see like what the deeds were, and what they stated, and what the easements were, and all sorts of. It gets real fun, right? Because we do everything's so electronic now. So it depends on how long you've owned the property, is how long we really have to go back on it.
Yeah. Yeah.
So every situation's different.
Yeah. Exactly right. So because I see it, as an agent, when selling a property or before we list the property, we do that title PR.
Yeah, it's called a preliminary report.
Preliminary review, report, exactly right. So we get that, and we're reviewing exactly what you guys have found.
Correct.
Prior to
on a preliminary level, right?
Yeah.
So with that, it basically it'll take the address. And anything that's been recorded against that address will pop up, right? So there's most judgments, tax liens, HOA liens, child support, all that type of thing. Easements, yeah. Huge. Easements are really big when you're talking about backcountry. Not so much lot and block, but that could come up as well, right?
Yeah.
So with that PR, then we can say, hey, these are red flags. This is what we need to be talking about before we move any further, because they could hold up our deal.
Yeah.
So it gives us kind of a bigger picture of what we're looking at before we get into it.
And is there a team at Fidelity that is literally going down to the county to look at the microfiche records, or how does that work?
So how it works is at Fidelity, we have like 2 different title units that are manned with about 2 to 4 people in each unit, right? So, and we all have our own job there. But then we have an engineering department, and we have a searching department. And then with the searching department, we actually pay for like third party that connect to the county.
Oh, wow.
So we don't have to actually physically go down there anymore. But we upload all the microfiche to our system, so we have all the records.
Got it.
And if we need something, we can go into that database at the county and pull from it.
Wow.
Yeah.
That's awesome. That's
It's
really
pretty
cool.
interesting.
Yeah. Well, and I think that goes to show why it's so important ahead of time to do your due diligence before and understand what issues may arise with a property, to confirm that they can sell it, right?
And I think a big one right now too is solar, right? So Southern California, we are a huge solar state.
Yeah. And
a lot of it's leased.
Yeah.
And with that, we're coming across a lot of these solar companies that are actually going bankrupt.
Yeah.
So within that, if you have a company, right, that you have your solar through that's going bankrupt, that can cause a real hiccup on title and can cause massive time delays.
Yeah.
So what do we do about that? So like once we know we have solar, then even if we don't have escrow open, we'll call the escrow officer and say almost like, hey, do a pre-open on this. We have to get this demand. We have to order it now because there might be some red tape we have to get through. Which
I've even run into, that some of the solar companies that have gone bankrupt, and then there's a new person servicing that contract.
Yep.
On a recent transaction that we had, they said, we're not even going to give you a response for 30 days.
Correct. And it literally could be up to 60.
Wow.
So what we've done as like we obviously, in insurance, we like to have everything done at close of escrow, right? Yeah. But if we know something is going to be outstanding, such as solar, there are things that we can put into place that's, basically we can put into the PR, into the policy that like kind of say like, okay, we know it's coming.
Yeah.
But so we'll have to cite it and we'll put it in as like, an addition.
Yeah.
But we have to do workarounds because it
could hold up a sale.
It sure can, yeah.
So there's different types of title insurance, right?
Yes,
different policy types. So there's CLTA, an ALTA.
Right. Those are the main.
And then a binder policy?
Yeah.
Or is that
so
an
binder
add-on?
it's an add-on.
Okay.
So what's interesting to know is I think people get confused because if you are a buyer on a property, and let's say you're a cash buyer, you're not paying for a policy.
Okay.
Okay. So people are like, what do you mean? I'm like, well, when you're a buyer, you only pay for a policy if you have a loan on a policy,
Like a lender
because the
policy.
lender needs the policy.
Yeah.
So that's essentially what the buyer's policy is. Okay. So if you're coming in as a cash buyer, you don't pay for title insurance because what we discussed earlier is almost going in arrears, right? So the seller always pays for the policy on the home that will go onto the home when the buyer buys the property.
Yeah.
So it used to be that you just had a CLTA. CLTA is a basic policy that covers the basic things. It's kind of like insurance on a car, right?
Okay.
So the ALTA is now what the car contract actually, it just goes to that, right? I believe you guys just automatically goes to the ALTA Plus. The ALTA Plus is kind of like this gold standard policy, which everybody should have anyway because it ensures unforeseen things.
And that's pretty common in like development deals, commercial. That's what a lot of my commercial clients, they'll request the ALTA policy from the very beginning.
The ALTA, so the CLTA, you get everything from the CLTA and the ALTA plus some. So like there's going to be, any like boundary situations or any uninsured deeds or things that just come up that you're not really understanding.
Yeah.
Or that you can see up front. We cover a lot more. So you definitely want that bigger policy.
Does a person buying a house, in Del Cerro, do you recommend that they have the ALTA policy?
Yes, I absolutely
So
do.
across the board, it's something that should be done.
Absolutely. Because, it's not, in the grand scheme of things, it's really not that much more for the policy that you're going to pay.
Yeah.
And you would rather pay that policy and have no worry than skip around it. And if something comes up, then you're out of pocket and we can't.
There's nothing you can do about it.
Support you on that.
Yeah. So it's insurance. It's a just in case.
Yeah. It's insurance.
And then, I know it gets thrown around a lot also, a binder policy for investors. So what is that?
So it's a fantastic option and it's not discussed enough. So I think what's tricky about it is like you have to go back to whoever you purchase a property from, right? So when you buy a property and you're an investor, you just have, and let's say you have a loan on the property, then you pay for the lender's policy. Then you also pay, it's like an additional couple $100s for the policy itself. But so you tack that on to what you're paying. But then when you go to sell the home, you're only paying the difference you're paying the difference between the policy that you paid for when you purchased and the policy that you're going to pay when you sell.
Got it.
And it is a significant savings.
Yeah.
So, but there are parameters to that, right? So you can't own the house for 7 years and say, I want a binder. It's normally about, I believe it's
2 or 5.
I think it's 2 years.
Got it.
So it's strictly meant for someone who's not going to be in a property for that long.
Yeah. So an investor not buying it for a long-term hold, but someone who's maybe a flipper, for example.
Yes, exactly. Or someone's like, okay, this is going to be our starter home for a year or two, and then this is what our plan is. So we're going to do that, just in case.
Yeah. But having the foresight to think about it is important.
So definitely though, going back to what you're saying, for investors and for flippers, it's definitely important because you're not going to hold on to that property for more than 2 years.
Yeah. And that's not something that, people are aware of, unless you specifically ask for it and talk about the title about a binder policy, it doesn't usually get suggested.
Discussed.
Yeah, exactly right.
It's something that we, I think as executives that go out and speak to, our agents and our clients, we need to talk to them about that.
Yeah, exactly right. So on a prelim,
yes,
what are, because you review every prelim, and it's pretty common that you and I will talk about it, and I'll ask your opinion. Is there anything that you think I missed, or is there anything worth noting, just so we have multiple eyes on it?
Yeah.
What are like the top 3 things that you really make a point? Obviously you're reviewing the whole thing, but like the top 3 things to look for.
Yeah. So that's a great question. I think that most importantly, we need to know what the vesting is. And it seems kind of oversimplified, but if we know the vesting and we know that there's been a death and it's in a trust, like there's certain steps that we have to take, and there's certain documentation that we need in the file in order to close it. So if we can know up front that trustee of a certain trust is the one who's selling, then you have to fill out your documentation properly.
Yeah.
And then there's certain documents that we will need in order to close the file.
Yeah.
So that's important, right? I think second, what the red flags that we're seeing right now, solar is a major one.
Yeah.
And that's kind of was maybe down on my list a couple of years ago, but it's probably in number
Worked
2.
its way up. Wow.
Because of the change of hands with so many of these companies going out of business and what it's doing.
Yeah.
So I think that's really important to get that up, get that done. And then I think child support is really important because it is something that needs to be dealt with.
Yeah.
It is a major judgment. Some people don't know they have it.
Yeah.
And so that's a fun conversation, but it needs to be dealt with, and it can take a very long time.
Yeah.
So the red flags to me are things that will take a long time, and it will cause a pause in closing.
Yeah.
That's what we look at. Like taxes can be paid through close. HOA liens, they can be paid through close. Like certain things are flags, but they're really not.
But they're not problems.
They're not problems.
Yeah, exactly. They're hurdles more than anything else. You just work
Perfect
through
way
them.
to say that.
Yeah.
Yep.
So, it's interesting because it's funny as you're naming these things off. I'm going through the catalog of closings we have, and I've had the child support component where, we had to get, the seller didn't owe any child support anymore, but it was still showing up.
Yes.
And so we had to get the signed
You have to get
form.
the zero demand.
Yeah, exactly right.
Yeah.
And that took time, and that took phone calls, and the seller was calling, the escrow was calling, everybody was trying to call and get this because it was holding things up.
Yeah. And I remember that situation because he was older.
Exactly right.
And it was like this, we've already dealt with this.
Yeah.
It's paid, it's done. But something along the way was not reconveyed and taken off a title. So that shows us a cloud on our title. So we can't move forward with that for the new buyer until that's rectified. And sometimes that takes
time.
A long time.
Yeah. Yeah. Especially, today's market's a little funky, but things are still selling quickly.
Yes.
And so there's still, things that need to be sorted. And, a lot of people don't want things taken care of before they remove contingencies. They want to make sure that it can happen and that it's not going to hold something up. So there's a lot of milestones that can get pushed.
Yeah.
And everyone's impacted.
And a lot of people think, just open the PR and, everything will be fine. But there is a lot behind the scenes that you and I deal with.
Yeah.
And we handle in order for that to run smoothly for your clients.
Yeah, exactly right. It's
a puzzle.
It's a puzzle, and it's a big piece puzzle.
Huge.
It's a 1,000-piece puzzle. Like it's not just a simple deal. There's always stuff, and the work doesn't start once escrow's open. The work starts well ahead of time.
And that's why I like to tell my clients, hey, if you're going to take this listing, take it first. But if you feel like, let's do a little bit of like preliminary, research on it, and we feel like this needs to be opened. Yeah. Let's open it. Yeah. Right. And a lot of times if we're talking about something that maybe has an easement issue, well, let's get that opened and let's pull the easements and draw them so we kind of know what we're looking at from an engineering standpoint. Yeah. Because that's important too. So every transaction, every property is different. I think that's what makes real estate super fun. Yeah. It's not just like day in, day out.
It's not monotonous.
No.
Yeah. Yeah.
No. And sometimes you're closing those deals and you're like, why is this happening? But then it's like you get it done. You're like, yes, that was fun. And now we're clean and we're ready to go.
Yeah. It's a sense of accomplishment.
Definitely.
Yeah. Yeah. Exactly right. So, I think there's we've talked about red flags that you got to look for. We've talked about the different types of policies. How do you work with agents? And I want to get into trusts and this new AB 2016. Yeah, 2016, yeah. But what are you doing when working with agents to help assist them? We're all a team here. And so we all want to look like rock stars. And so we work together to accomplish that. So what is it that you do to help agents in their success when they have a listing coming due or coming up, or they've got a property under contract? Right.
So, that's the fun part of my position is that I'm just not like an order taker, right? So I think every executive in this industry works differently. How I like to work is I like to entrench myself in the business with my people. I think seeing their success and helping with their success and aiding them in the best possible way to get them more listings, more transactions is very fulfilling for me. Yeah. So we'll help from, I have lots of marketing ideas. Like that's my fun, like part of the whole thing.
Yeah.
And, like depending on what they need, it's like all the ideas we can do through farming platforms that Fidelity has, just through things that I've learned, like third parties that I use, that I can suggest to them to get the ball rolling and to get the open houses going and get people in their open houses. I think that's kind of where we come in and where we shine.
Yeah.
Is we're just like a support system.
Yep. Exactly right. Well, and I mean, like, let's talk about the Fidelity platform.
Yeah.
For example, there's so much, it's robust and what can be offered and what you can find. I mean, there was a period where I was like, okay, I want to know every time there's a new birth in Del Cerro. I want to know the people that have owned over a certain amount of time. I want to know, a laundry list of things. And I could find all that out. Yeah,
it's all public information, right?
Yeah.
So it is all there, and it's a great way for you to connect with your people.
Yeah.
Right. So that platform it's called Fidelity Total Farm, and it is robust. So depending on what you're looking for, that's where we start, right?
Yeah.
Because we could sit in here and talk all day about it. But it is a great way for you to keep in touch with your farm and let them know, hey, when there's life events happening, I want to be part of that. Yeah. And even if I'm not in like, your everyday, like I know that like I'm going to call and congratulate you on that new baby or that marriage or, oh my gosh, you've been in your house for 5 years. we're going to do something about that. Yeah. So it's a way for you to stay connected with your people, but it's also a way to be like, okay, I have a listing in Del Cerro. I want to pull all the neighbors and invite them to this exclusive open house. Yeah. So now we have their data and now we can say, hey, this is Daniel with Define. I want to invite you. Yeah. It makes everything super easy. Yeah. And it's free for you guys, which is even better.
Well, and that's the biggest thing.
I love free sometimes.
Yeah, exactly right. I mean, we were talking about off camera how everything has an expense.
Yes.
I mean, it's 100 for this, it's 50 for that, it's 1,000 for this, like everything. So it's kind of refreshing when there's these additional tools that are probably more useful than the majority of the junk I pay for.
Yes. Yeah. And that gets into what we're talking about like before as well. Like I think this industry in general can get really sidetracked by the shiny pennies, meaning like, oh, this is the new lead source. Yeah. And oh, this is like, the new, whatever the case may be, there's always something coming out that looks amazing, right? Yeah. That can give you so much return on your investment.
So something else, and this is kind of out of the blue, but a question that is of interest and does, spark my curiosity because there's, I had a sale in La Jolla, for example, and after the fact, they found that a fence was encroaching on the neighbor's property. Is there a way that you can request a survey, or does title ever do that?
Absolutely. So it's not necessarily a survey because a survey it's different than an inspection. Okay. So it's apples and oranges. So surveys are definitely necessary, but not within kind of like our jurisdiction, right? So you would probably do that before you're buying a property or after if you're trying to do some major changes to a property. And there's a lot of expense that's incurred in that. But we would do an inspection. And an inspection, what they do is we call somebody and have them come out to the property. Yeah. So buyer, seller, everybody's welcome to come. And then they put the report together. They find their findings. Yeah. And then we go from there and we'll have to either, hey, this is encroaching. It'll have to be, added to the report as something that we're not going to include.
So is that an exception?
That could be an exception.
Okay.
So it's a fine line, right? So if you want to make sure that, how do I say this?
You don't create additional issues.
Thank you.
By having that title,
that's right.
By having that inspection done.
Yeah. But a lot of people, like I have a client of mine who loves to do stuff in Julian. She always loves inspections because we need to see exactly where our property lines are. Like because it's overgrown. There's a lot going on out there.
You can't see the markers.
You really can't. It's not as easy as it is, right, with lock and block.
Yeah.
So we do them, and they're actually very cost effective, and we just add that fee to the file, and it's paid upon closing.
Got it.
So, the buyer normally takes on that cost because they're normally the ones who want it. Yeah. But I mean, in real estate, everything's negotiable.
Exactly right. Yeah. What was customary once upon a time is not so customary these days when it comes to who pays what and those types of things. So, you mentioned earlier an important factor to consider is trust and who is who the property is owned by, the entity on
title.
On title. Yeah, thank you. So let's talk about this AB 2016, which
so important
is with regards to probate, right?
Correct. Yeah. So that bill has been in effect for years.
Okay.
It only affects owner-occupied properties, right? So it's not investment properties.
Okay.
But what's great about it is that it used to really be meaningless because the threshold on it was properties that were up to, I think, about $185,000 in value.
Which is nothing in San Diego.
Which is nothing, right?
Yeah.
So as of the 1st of April, they have basically said, okay, we're going to implement this new bill. So we have a threshold up to $700,000 now.
Wow.
That if you don't hold title in a trust and you don't hold title as joint tenancy, then normally you would go to probate. That would be like 2 years of cost and deliberation and chaos. And it would be a lot of that, on the families.
Headache. Yeah.
There is no probate anymore.
Wow.
So what we could do is you have to wait 40 days until you put this into effect. So after, let's say there has been a death or something happening, you wait 40 days and then you go, it's called a referee. Okay. So you go through a referee in the probate court and they kind of go through everything for you. They see who's who's who and who has
a sibling is or who
has financial rights to the property.
Okay, there you go. Perfect.
And then after that, they're able to sell the property.
Wow.
So it's a huge thing because you and I, we're part of the industry. So we know exactly like what we're talking about and what we're doing. Yeah. Most of my calls are vesting calls. Like, well, what should I do? And well, they don't know what they're doing. So these probates, they could be helped, but they don't know any different. Yeah. And it's unfortunate. And then something happens and they're like, well, I wish I would have taken title that way. So this helps them. Yeah. So it's nice. It's a little bit of a reprieve.
Well, and it's almost like an added protection without even realizing you had it, because if your property is priced up to, I think you said up to $700,000, that you aren't going to have to go through the process, and it's going to save you a ton of time. It's going to save you money. It's going to save you headaches.
Chaos. Yeah.
Yeah. Yes. So to protect people, because as an agent, I want to protect my clients, right? Like, so what is your recommendation on how someone should take title? Where their name should be, if it should be in a trust, as a trustee, what does title want to see to ultimately protect yourself?
Yeah, it's a good question. So there's two great ways that you can hold title, right? It just really depends on, how many assets do you have, and, family members and all sorts of things, right? So you want to always protect your family. I always suggest getting a trust, even if it's a simple living trust. You put your bank accounts in there, you put your home in there, you put your investments in there, and then you do a will for all of your property, right? If you don't do that, you can hold it as a single person, but something happens to you, then that probate would come in. Yeah. So see, like that, I always say, if you're holding title as a single person, create a trust. Yeah. Period. Right. Yeah. It just saves a lot of headaches. Yep. But let's say that you and a family member want to own a home, but we don't want to put it in the trust. Then you just do joint tenancy. Yeah, joint tenancy. Because there's survivorship that's associated with joint tenancy, where there's not survivorship in other vesting. Yeah. So if like
tenants in common.
Tenants in common. Yeah. That's definitely, in the past, it's been like probate, right? Yeah. But so joint tenancy, it's like it can be with multiple people, but you all hold title with the same share. It has to be equal shares. Yeah. But if something was to happen to one or two of those people on vesting, it would automatically go to whoever's else is on title. Yeah. Fully. So the survivorship would pass. Yeah. So I always say
it's a safety net, at least protection.
At least joint tenancy. Yeah. But if you can, put in a trust. Yeah.
And someone could put their property in a trust after the fact, right? If they close and they don't have a trust that's been created, they can do it after.
Yeah, I did that. So when I purchased my property, I put it as, a sole separate, easy peasy. And then shortly after, I just drew a deed, and then we put it into my trust.
And if someone wants to do that, what's the easiest way? If a consumer, an end user, do they call their agent and say, hey, I want to do this, and then their agent puts them in contact with you? Or what does that process look like?
So there are legalities to that. Okay. So because, you can't, you don't want to get caught in something that you weren't supposed to, right?
Yeah.
So what I can't definitely call you for sure, because you can help them, guide them. And then I can also guide them too and give you the proper paperwork that needs to be filled out.
Yeah. Yeah. You can't do it for them.
Right.
Yeah.
And where they need to go.
Yeah.
And how the process, unravels. So I can take them from point A to point C.
Yeah.
Or point A to point B, whatever you want to say.
A to Z, the whole thing.
A to Z. Yeah. So, and they don't know how to do that. So, and that's for us, you and me, that's what we do every day. So definitely have them call you.
Yeah. No, I think that's great. I mean, there's like I said at the beginning, there's so many nuances that go along with selling a property, with buying a property, and title gets thrown around. And, there's so much uncertainty.
There's so much to know. And I think as the consumer, I think it's best to keep it simple for them.
Yeah.
And I think what's most important as you work with an agent and a brokerage that you trust.
Yeah.
Because they will guide you through better and worse. Not every situation is going to be easy.
Yeah.
But
every transaction's different.
It's so different, but you're a great, great asset to them.
Yeah.
And then you are working with your people and your affiliates that support you and are very knowledgeable too. So we're forming an alliance.
Yeah, exactly right.
And we're just kind of protecting your clients as they move through this whole housing.
Yeah.
Industry.
The whole thing. And like you said, A to Z.
Yeah.
It's all part of the process.
I always tell my clients, it's like when I sit down with them, I say, I don't always have every single answer, but I can guarantee you I will find the answer for you.
Exactly right.
I know someone that can handle this for you. Just give me a couple minutes and I'll work on it.
Well, and that's our job more than anything else, is not to sell, it's to connect the dots.
Yep. And help.
And help. That's exactly right. Be a resource.
Yes. Come from contribution, I always say, and help them when they need it. And everything always just comes around. It comes tenfold.
Yeah. I love it.
Yeah.
Thank you so much for coming on today.
Thanks for having me.
It was helpful. I hope you enjoyed it.
I loved it. My first one, I think it went great and it was nice. So thank you so much.
Of course.
Yeah.
Hey guys, I hope you enjoyed it. We're going to link Lynne's information in the comments below. Don't hesitate to reach out, ask any questions. If this has sparked any additional questions or insight, I'd love to hear what you guys have to say. Have a good one, and I'll see you on the next show.
Thank you.